Hi everybody, it's me, Gregory Mannarino. How are you today? It is Thursday, October 5th, 2017. Alright, here we go. I've been pondering what the Federal Reserve is going to do at the end of this year, like you have no idea. And if you follow my work, you also are well aware that quite honestly, there is not another person out here, I don't care where you want to look, that has been more accurate with regard to what the Federal Reserve is going to do than I am. In all of the years that the Fed has been talking about raising rates, I have been wrong one time. So I would have to say that what I'm about to tell you has a very high probability of taking place, and I want to talk about that specifically in this video. So what do we know about the Fed? The Fed is stuck in a very, very bad spot, and they keep moving goalposts. They keep changing their minds. We hear one Fed president say something, and then another Fed president say something else. They really have no idea of what to do with the monster, the financial monster that they have created. Again, we have never been here before, people. This is uncharted territory. The Fed never had any plan whatsoever of how they would unwind their balance sheet or normalize rates. And now, people, for the better part of a decade, we have been living in financial fantasy land, with world central banks, obviously the Federal Reserve as well, have been buying everything just to keep things propped up. And this has caused an environment of extremes, and I've gone over this multiple times, and this is going to correct to fair value. There is no doubt about it. When? I don't know, and I do not care. All I want for us is to make this work for you and for me. Pretty simple, pretty straightforward. Now, the entire system is built on confidence. Confidence that it will function. It's not backed by a hard asset or anything. So the Fed has got to remain or make it seem like that they have some handle on what is going on. It's pretty much that simple. So, here we go. Come December, the Fed is going to raise rates. The federal funds rate, 0.25%. I don't think it's going to be more than that. I don't think it's going to be less than that. Again, the Fed they have no choice. If the Fed does not do this, I think it's going to rattle the markets, and I'll tell you why. All we hear from our politicians, the mainstream financial channels right now, I guarantee if you're going to turn it on, you're going to hear, oh, our economy is strong. The world economy is doing better. Really, if that were the case, then how come the Fed couldn't do anything at the last FOMC meeting? And why is it that Janet Yellen, you remember Janet Yellen? You know who she is? You know, the current Fed chair? She actually came out and admitted that the Fed might have gotten some metrics wrong with regard to their inflation data and with regard to employment. So you can see where this is going to go. If the Fed does not raise rates come December, the market's going to realize there's something very wrong with what we're getting, the information that we're being fist-fed. And what's actually going on. Now, I have no doubt that if you follow this blog, you know exactly what's really going on here. And let me just say congratulations to you on that, because you are one of the few. And you should be proud of yourself for that. So the Fed, come December, is going to raise rates. It will be, again, a fraction of 1%. With regard to the federal funds rate. Now, the balance sheet. Let me go over that real quick. When the Fed made their announcement months ago that they were going to start normalizing their abnormal balance sheet, I was probably the first guy to say they weren't going to do anything And I stand by that even till today. I know that the Fed is supposed to start normalizing their balance sheet this month. We haven't heard much about it. The market doesn't believe it. As you can see, the stock market is higher again today. And that's no surprise to any of you either, because I've been outlining this for you almost in detail, telling you what was going to happen before it has. And and how can I do this? Because I just follow the flow of money. I look at what the bond market is doing, and I try to put this whole thing together and come up with the most likely outcome, and that's pretty much what has happened here. So what does this mean for everything else? Again, the Fed has to do this. If they don't do it, I think the market's going to have a fit. I really do. So if the Fed raises rates come December, and barring a major event, and I mean a major event, the stock market is going to continue higher. I know how crazy that sounds, but I've been outlining this for all of you, and I have been spot on with this. There's nowhere else to go. There is nowhere else for investors to put cash. You're more than likely going to end up seeing the 10-year yield climb. I mean, it's going to bounce around where it is right now. It might go higher here. I wouldn't be surprised. That means cash is leaving the bond market. It's going to look for somewhere to go. In this environment, it's going to go into the stock market. And the stock market is going to become more distorted than it is right now. But again, don't lay down here like a deer in the headlights and sit there paralyzed. Make this work for you. It's not that hard. Honestly, especially if you're following this blog, I'm telling you what is going to happen before it does. So this gives you a huge edge over most other people that are trying to make money in this market. And you should still be betting against the debt, becoming your own central bank. The debt is going to get monumentally worse, people, on a global scale. There is no way to fix that. No way. Zero. So with that knowledge, you know what you should be doing. Hoarding silver more than anything else. I mean, it's my #1 favorite asset, bar none, period, the end. You know that. Getting out of the dollar. Look for alternatives, including cryptocurrency. That I know that term bothers you. Don't think of it as cryptocurrencies. Think of it as an asset. And again, I said this on an interview I did just yesterday on the Hagman and Hagman report. I don't know if you got a chance to see that. If I were you, I would watch it. Joe Salente's on there as well. You got to think of these things in terms of, this is where I should be putting my cash for now, okay? This is, I think Bitcoin, for example, I still stick to my initial target of $5,000. I think it's going higher than that too. And regardless of if you want to equate this to tulip mania, so freaking what? So freaking what? Open your eyes, look for where the opportunities are, take advantage of them while you can. Otherwise, you're just going to sit there and stay stuck in the dollar. I say that makes you pretty stupid. I mean, to be quite frank, you know how I am. I tell it like it is. I don't sugarcoat anything. So that's the way I see it. The easiest thing to do for you people as a longer-term investment is get out of the dollar by moving your assets into gold and silver, more specifically silver. I love gold. You guys know that. I love platinum and palladium too. I own them all. But silver is it. Silver is it. And I cannot stress that enough here. All right, so before I go off on another tangent here, December, Federal Reserve is going to raise rates. If they don't, the market is going to have a fit of truly epic proportions. Anyway, we're going to see if I'm correct. Here I am out publicly, and I'm going to refer back to this back in December, come December, just 2 months away. Going to be interesting, I can promise you that. Anyway, with that said, I'll see you tomorrow. Over and out.